Well, another day, another announcement, and another massive drop in price for SOFI stock. This bombshell announcement was honestly hated by all on Wall Street, but was it actually that bad? Or was it a complete disaster? Or was it actually good? Well, let's look at all that and get you guys the truth and get an answer to that question. Just make sure you like the video if you like getting the truth like this about stocks like SOFI and in situations like this. So for me, there are 5 key points that we're going to talk about in regards to this announcement today. I'll explain it all to you guys, I promise, in simplest terms that I can. And more importantly, we'll also discuss what it means to the stock price long term, because we have to know the impact of that. More importantly, I'm sure that's probably what you guys are most interested in. So don't worry, we'll talk about it. So first up, more debt being added. All right, this gets complex here, guys, but let's kind of break down the first part of this deal first, just so that way we have an understanding. They are taking out debt of $750 million in convertible notes, not to pay the bills. And that right there is the very, very key to all of this. Normally, companies are taking out debt or issuing shares or whatever the case is to actually continue operations. And in this case with SOFI, they're not actually doing that. They're paying off a lot of high interest debt that's got 17.5%, which is what that debt is getting ready to roll to here in May. That's a lot of money being paid out in interest that they're not going to have to pay out. And there's some other debt involved in that as well, and I'm sure it's high interest. I didn't get into specifics yet. I'm sure we'll see it when the actual filing happens. But nonetheless, this is essentially debt management, and effectively managing your debt is what SOFI is doing here. At its core, it's simply restructuring their debt. Now, there's a lot of high-level finance involved in this. This is obviously not it started off, it looked like a pretty simple deal at the start. And most of these are very, very simple deals, but this one's not. It's a lot more complex, and don't worry, we'll get to it here. But at its core, kind of understanding what's going on here, it's essentially a restructuring of debt in a very fancy way is kind of what we're doing here. This is not debt being taken out to continue operations or anything else like that. So number 2, are you being diluted? Not at this stage, we're not being diluted. And again, this is complex here. We'll get to the complex part here in just a second. But typically, when companies raise through share dilution, basically, hey, we're going to issue so many shares of stock out there, raise X amount of dollars. That's done. Sometimes it's done by companies who are, expanding rapidly. Think Tesla, 2020. They were expanding rapidly and they were issuing shares out there like crazy. So they had the capital to build the new gigafactories and everything else that they want to do. Rapid expansion like that. The other reason, and the most common reason why we see it, is because they need to pay bills and they need to dilute in order to pay bills. At first glance, it can kind of look that way, especially whenever you just read the headline on the announcement, but that's why we don't read headlines here. We actually get into the actual facts of what's happening. The reason why share dilution is used so often is because when you need to raise money and you're struggling and you're burning cash, nobody's going to give you a deal where you can basically trade money now for money in the future. People don't even know if you could be bankrupt 6 months from now. So that's right there is not a good deal. So the deal that SOFI is able to structure is actually dealing from a position of strength. When you're in a poor situation, nobody's going to give you that money up front like that. You have to just basically give it to Wall Street, the shares to Wall Street, and tell them, hey, just dump it on the market. That's the only way that you can raise money on it, is basically using Wall Street and their ridiculous fees to just dump shares on the market and dilute you even further. SOFI is coming from a position of strength, so they don't have to do that. In this case, people are going to be willing to hand SOFI money now for a little bit of interest in the meantime, and then obviously a payoff in the future, because to me, there's no chance of them going bankrupt anytime soon. And obviously, if they weren't in a position of strength, this sort of deal could never get put together. So in the case of these convertible notes, we kind of discussed the easy stuff here. Let's get into the little bit more complex part so that way you understand it. And then of course, we'll obviously get to what it means to the stock price long-term and everything else like that as well. So number 3, they also did a cap call transaction. Now, this is not my favorite strategy for raising, and I'm not saying it's good or bad or anything else like that. We'll get into the specifics here. But remember, I'm kind of a keep it simple kind of guy per se. And so that's the reason why I don't like it as much as other strategies. It does carry a little bit of risk. It's not a lot of risk. It does carry some risk though. But I'm going to try to keep it simple here for you guys and just hit it on a very high, simple level, so that way we can understand the basic mechanics of what's going on. We would actually try to deep dive the whole thing. It's probably 30, 45 minutes to get into all the various nuances with this deal and such. It's just, nobody wants that. 1, 2, I don't want to talk for 30, 45 minutes on camera. And 3, it's not really helpful to you as an investor. I'm sure there's a video out there, somebody explaining exactly what this is, that can give you a full detailed breakdown on it. Essentially what's happening is SOFI is taking out a call option on SOFI stock, which the broker of the deal will actually facilitate the transaction to basically pay off the investors in the future using that call option and those shares. That's basically done instead of giving out preferred shares with a high interest rate in between those preferred shares basically coming due and converting into preferred shares in the stock. So in this current deal, the investors are going to get a much lower rate at the beginning, but then it's going to convert to something that makes them a lot of money on the back end there. So that's kind of the way this works. It's a little bit differently than preferred shares, where that structure is a little bit different, where it has a higher interest rate, and then it converts in the preferred shares on the back end there. So for SoFi, instead of high interest payments that are, obviously would have continued on at 17%, or if they would have, redone it, maybe they're able to get it down to 15%. Who knows at this stage what they could have gotten on with that particular deal. They're offering shares around today's prices to be given to those investors in the future. So to kind of keep this simple here and just kind of illustrate the deal, remember it's not finalized or anything else like that. Essentially, SoFi is saying, hey, we're going to give you guys in the future shares at $7 and some change in the future. So in the future, if SoFi is, $14 or so, they're going to get shares at $7 during that time. And you can kind of see how that's appealing, right? I mean, it'd be great to be able to get shares of, pick your stock today. I don't know, Meta at $500 today or whatever the heck it's trading at. But today you receive shares with a cost basis of $100. That'd be awesome, right? That's an instant huge boost to you in the end. That's kind of what SoFi is offering to their investors is, hey, in exchange for higher interest payments and all this other stuff in between, we're going to give you guys shares at a much cheaper cost basis in the future. Now that's highly appealing to a lot of people, especially when a stock is beaten down like SoFi is. It's kind of a win-win for SoFi and for the investors. So doing quick rough math here, again, it's not perfect. We'll wait until the deal's final before all these numbers are actually the right numbers. There's going to be approximately 100 million shares of SoFi that are going to come out of the market in order to kind of facilitate this transaction. So it's going to come off of the market right now, and that's eventually going to be distributed to those debt holders in the future to kind of avoid having to pay out the 17% interest in between and then having to issue preferred shares at the end of that deal. Which, if I remember correctly, they saved SoFi like $40 million or so. Don't quote me on that. I'm having a hard time remembering now. I think it's $40 million though on the deal each year over the long run. And of course, that's actually once the deal goes through and is executed on and all that good stuff. Number 4, why did the stock tank then? All right, we'll talk about the long-term implications of share price here in just a second, guys. We're getting to it, I promise. But the reason why Wall Street sold is because Wall Street's dumb. They saw the headline and they did exactly what a lot of people did. They just sold. The algos just sold. Everybody kind of created a downward momentum. And this is typical Wall Street shenanigans. They know what's going on, especially once they actually dig into the deal and figure it all out. But they weren't willing to do that work. Traders are going to trade news and they see the headline come across a little Bloomberg terminal and it sell. All the algos are triggered to sell based upon positive or negative news on that Bloomberg terminal. All those sort of things like that are going on. This is typical Wall Street shenanigans with a stock like SoFi, especially one that has, I won't say fallen out of favor, but it definitely, once it turned profitable, they beat it back down again. Those traders definitely were beating it back down. This is what Wall Street does. And thankfully, the folks in our group were absolutely snapping up shares. They saw right through the shenanigans, dove into it, figured out what the actual truth was, and everybody started buying up shares. Now, of course, I went too fast like I always do. Hey, nothing new here, guys. But nonetheless, we knew the deal and we were absolutely cutting through it. So great job there by the team of actually not panicking, but putting in the work, figuring out what was going on, and then executing accordingly to their plans. Which if you want to see that sort of action in real time and get free coaching and take the new stock course, take advantage of the sale that's going on right now for my group, where you get all of that, plus 4 other courses for free that you can take. Be a part of the best 6, 7, and 8-figure Discord out there. Like I said, get that free coaching. We just had our first session last weekend. It was awesome. You can talk to me anytime. We do live Q&As, see my complete watch list with price targets, see all my buy and sell alerts in real time, see everything that goes on there. Make sure you check out the pinned comment down there so you're ready for situations like this. You can take advantage too. So check out the pinned comment down there and see if a membership's right for you and take advantage of the sale before it ends. On to number 5. What does it mean to the stock long term? Now, I know some of you guys are going to be mad at me, and that's okay, but let me be very clear. This is not a game-changing move that's going to send SoFi to $50 next quarter. I'm sorry, it is not that. It is also not the end of SoFi or a sign of weakness or anything else and all the other crap that all the bears are going to throw out there against SoFi as well. It is absolutely not that either. It is a wise move and a wise debt management move and restructure that will make a nice difference to the bottom line. Nothing earth-shattering, not this thing that's the next great catalyst for SoFi stock. It is just a nice, prudent, wise move by this management team. So long term, this doesn't mean much to the stock price because if this stock does what we think it's going to do long term, 40 million savings a year is not going to be that much compared to how much profit I think they're going to be deriving in the future. I'm not saying it's not good. I'm not saying it's not a nice bonus. I'm not saying any of those things like that. What I'm saying is, it's not this massive catalyst to this new level, and they just unlocked the 10D chess, whatever superlative you want to put out there. I want to make sure I cage expectations with this. It is a great move that is very prudent, very wise, is going to absolutely help us out in share price, small, incrementally. Like I said, hopefully long term for this. This is, $40 million is nothing. That's something they do in just a few days in the long term. That's kind of what we're all hoping here with SoFi stock. But to me, what this shows is it shows this management team continues to execute on a very high level. This management team has executed top 5, you could argue top 2 or 3, over the past couple of years, and that's saying a whole lot given some of the incredible management teams that are out there right now crushing it in the stock market there. This is just another example of that management team doing things incrementally to make this business even better quarter in and quarter out. I was very pleased with this action, very pleased with the management team. If any of this appealed to you at all and you want to take your investing to that next level, make sure you take advantage of the sale right now. Jump in on our coaching, jump in on our new course that's out there, jump in on our live streams where you can ask me anything. Make sure you're taking advantage of that sale and be a part of the group where you have a group of 6, 7, and 8-figure investors helping you become a better investor, helping you learn how to do those valuations, have a plan, have a price target, control your emotions, see examples of real plans in real life being executed in real time. All that is included in there, guys. Make sure you check out the pinned comment, see if a membership's right for you before that sale expires. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.